Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Welcome back, and thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. You can also go to TomWilsonProperties.com, sign up for our weekly newsletter on what's happening in the world about real estate, both nationally, world economics, and locally. You can also, by signing up, get access to commercial syndication products that we have available frequently to only our clients per SEC requirements, and where you can, for $50,000 or so a share, you can be part owner in a real estate office building or industrial manufacturer or retail center for a small share, and you're buying a share in a private company that owns that product, very much like the public, except it's only available usually to our own clients. There's also a lot of education information on there, podcasts from the past, guests that we've had on the program, including Bruce Norris, Robert Kiyosaki, John Schaub, and our guest today, Peter Fortunato. So we're very glad to welcome back today Peter, who is going to be, if you're listening to this prior to October 21 and 22, you will be able to come and see Peter live along with John Schaub. And help me co-host today is Michael Marangelo, who is the founder and president of Bay Area Wealth Builders, the longest-running club for real estate investors in the San Francisco Bay Area, who also has his own company, Sunvest, and is a very long-time investor and hard money lender and note dealer. So we're glad to have Michael back to help us co-host today. So Peter has been, he's getting a little bit of experience now. I think he's had 45 years of experience. He's a proud capitalist. He went into real estate right after, at the very beginning of his career, unlike most folks who make it their second or third career. He's was very motivated to be self-employed from the very beginning. And he's been a teacher in the real estate investment arena, and certainly a legend indeed for the individual investor. And also, he just was back at the Bruce Norris I Survived event, where he, along with John Schaub, had won the award for the award for the year for all of his contributions to real estate investors and the real estate investment community relative to education over all these decades. So, Peter, welcome back to the program.
Thank you, Tom. I look forward to it.
Boy, wasn't that a wonderful event down there at the Nixon Library and Yorba Linda that we all got to attend.
It was just wonderful, and such a great cause and such great people. It was just the showstopper event.
And I was so glad that you got the honor that you deserve and all that you've given back to the investment community this year. That was a terrific moment indeed.
Yeah, well, John and I were both very proud and happy, and we're such old friends. We had a great time traveling out there together and seeing a lot of old friends. So we had a terrific time at the event and getting around, seeing a whole lot of real estate investors who we've known for a long, long time.
So, Peter, most investors that I know didn't get smart enough to go into real estate investing until later in their other careers. What planted the seeds for you to start so early?
Well, I think you misstated when you said I had a desire to be self-employed. I really had a desire to be unemployed. And when I mentioned that to my guidance counselor when I was in high school, she just came apart. She was not prepared with an answer for that. And I had to explain to her that I wanted to be comfortably unemployed, which means get enough assets so the assets can provide your lifestyle so you can do whatever you damn well please. And so from there, I got out of high school and went in the real estate business as an agent so I could earn some money, build up a little bit of a surplus, and begin investing. So I started as a real estate agent in 1965. I got my license in August of 65. I had my first commission, $246.12 in September of 65. I told everyone what my goal was, that I intended to get enough assets to provide my lifestyle. And it took me 2 years as a real estate agent where I earned a living, made commissions, before I was able to buy my very first property. And so after 3 years out of high school, I had 95% of my income that was provided by my labor, self-employment. I had to pay taxes. It was terrible. And only 5% came from a little bit of rental income that was left over after all the costs of owning those first 3 units, a little 3-unit building I bought.
But Peter, what very few people have the insight and the paradigm to want to, especially back then in the 60s, to not want to just go down the traditional path of getting education, getting a job for another company. What planted those seeds? Was it someone you met? Was it your parents? What planted the seeds for you to want to become financially independent and be on your own instead of the traditional path?
Well, I read all the time. My mom and dad, when I was a little kid, my dad had an ice cream stand, and I was a very fat little kid. And then when I was about 3 or 4, he opened a department store. And then in 1957, he opened a real estate and insurance business. My grandfather was a barber who lived above his barber shop in a 6-apartment building with 2 commercial stores downstairs. And my mom's dad was a contractor, and my mom's uncle was a real estate broker. And so all I didn't see people who fell into the trap of getting a job. I saw people who had assets allowing them freedom.
So you grew up in a little different environment around you than a lot of people in the past few decades. And you said your father one of his businesses was involved in real estate. Is that what kind of planted those seeds? Is that where you first observed real estate and decided to go that path?
Well, the real estate and insurance business that my parents had gave me access to real estate as a business. Mm-hmm. But I think that my grandfather, living above his barber shop with the apartments and raising a family,
yes,
and going back to Italy in time to have Mussolini and the fascists steal all his money, but because he still had the apartment building back in the States, being able to come back and have a place to both live and to have his business and to have some income. And of course, I wasn't there to see that, but I sure was there to hear about it from my uncles and aunts and from my grandfather. And so, I mean, that probably played a role. My parents were both entrepreneurial and remarkably patient with a particularly difficult son.
Oh, how wonderful. Let's bring Michael in here, who's in the studio with me today.
Pete, welcome to the program. I know that you strongly believe in continued education, and obviously we've known each other for many, many decades, and that even to this day, as I understand it, you continually attend educational events, and I know that's important to you. But one of the philosophies I know you've talked about over the years, and maybe for the audience you could describe the genesis, if you will, from a starter to an ender as it relates to real estate? I know there's a couple of steps in between, but that would be, I think, interesting for our audience to hear.
Okay, well, Mike's talking about the journey from getting started with your laboring to earn anything, and from where you have the vision of the what can be. You dream the dream of having enough assets to set you free, and you start with a net worth of 0 if you're better than most, and below 0 if you've been to college. And so then you start working to get some assets. And at some point you have, like I mentioned, after 3 years I had my very first property that provided team for the cash flow, and then after 5 years, a third of my income was coming from rent. And after 10 years, enough of my income was coming from rent so that I no longer had to work. Well, that period when I was acquiring the assets that one day would provide me with income, it's a wealth building stage. That's what starters begin, and then they begin to acquire some properties and some contacts and build some relationships. So, for example, I bought my first property as a starter, small multifamilies, triplexes and fourplexes. Then, when I got into it a little bit more, and when Gene and I had our 4 children, we wanted to be able to spend free time with our kids. And so we converted from the small multifamilies to single-family houses as we were wealth building, and we finally had some assets, and we wanted to have the time more than the additional income. So we fled the small multifamilies and ran to single-family houses where people would leave us alone and take care of our properties for us.
Right. So I know we go from, Pete, I know we go from starters to another step, and I know Tom is signaling that we're going to come up on a break in a short bit here. So I think we want to continue on with this discussion.
Yeah.
Okay, well, I went from being a starter, getting some stuff, to finally being an estate builder, where I was starting to better, to cull and improve my portfolio. And ultimately, to the point that I had enough assets where I became an ender, or as John Child's wife, Valerie, likes to say, a spender, because she doesn't
okay.
an ender.
Peter, we will continue after the break here. We've got legendary Peter Fortunato on here with us today, 5-decade investor and educator. Stay with us. We're going to ask Peter some tough questions, and maybe even have him talk to us about the future and how to deal with today's unique market. So stay with us here on Real Estate Radio Power Investing. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We're so fortunate to have with us today legendary Peter Fortunato, 5-decade investor and educator. And also in studio co-hosting with me, Michael Morangelo, who is the president and founder of Bay Area Wealth Builders up in Marin County, and also the founder and owner of Sunvest Property Solutions. Peter, you were talking to us before. I think I want to mention here before we go any farther, if you're listening before October 21 and 22, there is a workshop that's sponsored by BAWB on those dates. Michael, you want to give another moment about that?
Yeah, it's a very wonderful opportunity to both listen and learn from the collective wisdom of both Peter and John Schaub, who I know is also a guest on your program. And they're going to be in the Bay Area. We're going to be holding an event at the South San Francisco Conference Center. The title of the event is Bus, Booms, and Beyond. And there's a lot of, I think, changes that are going to be coming about with regards to the future of property for people. And folks can learn and really benefit, I think, from the insights and the collective wisdom of both of these individuals.
Indeed. Peter, let's continue the conversation about the progression of your career, how you went from a job where you had to work and you were buying properties. What was the next phase?
Okay. I finally bought some properties, and then I was managing those properties and providing some cash flow for myself from rent as opposed to from labor. It took me 1 decade to get to the point where I had enough rent to cover my lifestyle costs. So at that point, I did have enough assets to provide enough income so I didn't have to work. Now, that meant there was no excess at all, and so I kept building. Then, as I said, Dean and I, when the kids went to school, we took 33 rentals and boiled them down into 22 rentals and a mortgage portfolio, which we spent so that we could spend free time with our children. And that was quite remarkable in terms of the results being 4 incredible kids, but 4 kids who chose to be real estate investors, not because of all my preaching, but because of the free time we spent, and they saw the cash flow didn't stop even when we traveled for weeks and months at a time.
Peter, how did you navigate the busts and booms? Did it take you quite a while to figure out the importance of timing, like most of us investors, or how did you handle that?
I'm not a timing guy. I bought a house in 1967. I bought a house in 1968. I bought a house in 1970. We still have them. I bought a house in 74 on the water for, I'll say 75, make it easy. 75, I bought a waterfront house in Florida for $50,000. Now, there were terms and all that kinds of, but just forget that part for the moment, $50,000. In 1985, it was a $100,000 house. In 95, it was a $200,000 house. In 2005, I got a cash offer of $335,000 for the house.
Well, let me ask you this: when do you hold forever as long as it's performing? However, do you tend to buy less when we're in a down cycle or at a peak, I should say, and buy more when it's when we're going across a down period?
No. I buy when there's opportunity, and opportunity is personal, human. I'm a microeconomics guy, not macro.
Okay.
So I sit down with someone, and I'm there today because of repeat and referral. So they're not strangers to me most of the time now, where when I was a starter, I had to really prove myself from the get-go to show them that I was both competent and trustworthy. Today, it's mostly people who called me. So since value is personal, I talk to people. I get face-to-face and ask them questions like, why would you sell a nice house like this? And I hear the story.
Nothing better than relationships, is it? We need to take a break right now, Peter, and we'll hear a little bit more about Peter's approach, which is different than a lot of folks who are really trying to identify the peak and the bottom of different cycles. So it's nice to hear a different paradigm. We got legendary Peter Fortunato with us today, a 5-decade investor and educator who's given so much to our community. Stay with us. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Peter Fortunato with us today, and in the studio co-hosting with me is Michael Marangelo, the president of Bay Area Wealth Builders, where Peter and John Schaub will be coming for a Thursday evening presentation as well on the 19th?
The 19th
on
of
the 19th,
this month
and then
of
on the
October.
21st and 22nd of October for our workshop. So Peter's just in the last segment told us about how he has pretty much ignored cycles, and as long as you have good relationships with people, you can always find a good deal. You don't have to have a particular time in the market cycle to find a good deal. Did I summarize that okay, Peter?
Well, you did. I think what people miss is that no one wants dollars, and the lazy people are just making cash offers at low prices, hoping to make a deal. And you're successful in real estate not by doing, as Bill Cook says, not by doing things to people, but doing things for people. And so discovering, why they're selling that house that they've owned for 20 years, clearly something's changed in their life, and you can help them. And most of the deals I do, well, all the deals, in 52 years, I've done 2 all-cash transactions.
So can you give us an example of something that you give the seller other than cash?
Oh, sure. The first and the most usual currency that I use is a promise.
Is it what?
A promise.
Oh, a promise. Uh-huh. Okay.
Yeah. I mean, my first property I bought subject to the mortgage by promising to make the payments for a guy who got a job 1,400 miles away from his house.
Okay.
So that house was a great house, but it turned from being a wonderful property to being an anchor for him.
Mm-hmm. What's another example?
I bought a house that was a rehab house, very unusual for me. I bought and sold 5 properties, and each of those was only because my kids wanted to make some money when they were getting to be adults. And I promised, I'd say to the person, I'll buy your house, I'll fix your house, I'll sell your house, and then we both get paid. So my promise is I'm going to buy the house, I'm going to fix it all up. Once it's fixed, we can both get paid, but until it's fixed, no one's getting paid. No one can go borrow against it. It's not going to attract a good buyer. And I'm not a flipper by any stretch of the imagination, but I've done that 5 different times in 50 years.
Okay.
I've talked to people who have talked to me and said, well, when I said, why would you sell a nice house like this? The doctor said I can't do stairs. And so you get people here in Florida who raise their family in a house, and suddenly they find themselves older and unable to handle the stairs any longer. So when they tell me that's why they sell the house, what do? I'll give them a condo in an elevated building still in the neighborhood where they live so they can stay around their friends and their support groups at church, and I'll take their house. I'm delighted to move from a condo into a house. And I've done that where I've given a couple getting divorced 2 small houses for their one real nice house. Another gentleman, he and his wife had a nice 3-bedroom, 3-bath waterfront. Now, this is not waterfront like on the bay. This is waterfront like they call it a lake here in Florida, but it's really a pond in the rest of the world. And 3 bedrooms, 3-bath house. And they were alone in the house, and they were struggling with the payments. I traded them 3 little tiny houses for their one nice house.
And Peter, I'm sorry, we'll have to finish this story right after the break. Stay with us, and let's hear how Peter navigated this deal. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
I have Peter Fortunato with us today, and Michael Marangelo co-hosting with me in the studio. So, Peter, and Peter's telling us different ways that you can acquire property other than cash. In fact, almost all the properties he has acquired has been not cash. So, with this waterfront property, how did that wind up, Peter?
I traded Chet and his wife 3 of my leased property, 3 little 2-bedroom, 1-bath houses, for his 3-bedroom, 3-bath house. Now, what happened is he gave me a real nice pride of ownership property, and I gave him pride of cash flow, 3 houses where he lived in one, and with 2 tenants in the other 2 houses, so there were 3 distinct properties. He kept an estate for his children one day, and he had the 2 tenants in the 2 houses paying all the expenses for the 3 houses.
So you solve problems for others, and in so doing, you've been able to acquire properties. So
and I care enough to find out what the problem is, which means you got to listen to people.
Yep.
So face-to-face is really where virtually all the business I do is done.
Okay, and I presume that you like the long-term hold rather than fix and flip, right? Because fix and flip is a lot of work, just like being an agent, right?
Well, no, fix and flip is a business.
Right.
So your cash flow is profit on buying and selling.
But you got to keep working.
And I don't want to work. The one part of the deal I won't take is the work part. Everything else I'm interested in, but work is not one of them. And I tell people, they always ask me at the RIAs that I go to, what's your exit strategy? And I say death.
Yeah, well, that's a nice adjustment for cost basis for your heirs, isn't it? Let me ask you 2 or 3 quick questions. If you can give us a kind of a summary, quick answers, such as, do you think there's going to be changes in the tax laws that affect real estate, and if so, what might they be?
It's possible. I've not seen anything in this administration that suggests they're competent enough to get anything done. But in the event that they got some of the tax changes, whatever they are, that's going to mean opportunity for people who learn what they are and then go use them to help other people.
Where do you think inflation and interest rates are going?
I'm not. I've been waiting for rates to go up since '98. That's right. But I am a buyer for my family, for my grandkids, and so I'm buying like crazy. I mean, and for me, I bought 14 houses in the last 3 years, which is an awful lot. All of them, with one exception, one was an exchange. All of them have been bought with 3 to 6% financing, 30 to 50 years, simply because I see the U.S. dollar devaluing over that entire period. And so I want to take advantage of that kind of leverage while it's available. I never expected at age 69, now I'm 70, but I sat with a friend of mine and we did an installment sale for him and a purchase for me with seller financing. And to make the numbers work, he financed the house for me by carrying a 53-year and 4-month note.
Folks that live in a high-price housing area, do you think they're pretty much stuck with going to areas that are less pricey houses and therefore will have a better rent ratio, or do you think there's some techniques that can be used in a high-end area?
Absolutely not. I think it's a big mistake. In my history, I've never sent my money away and had it come back, so I keep my money close by. I think that it's your responsibility to structure a deal that works in your neighborhood. And that means you have to go talk to people.
But Peter, to be fair, you happen to live in an area where you can do that. If you can buy a house there for $200K and that same house costs $1.2 million in San Jose, that's pretty tough to get cash flow out of, isn't it?
No, it is not. If you say to somebody in San Jose, I will buy an option on your house if he captured the upside, yes. What's your negative cash flow? If you lease the property, if you buy it with a single payment note due when you sell it, it's your job to structure something to make it work. If you're paying all cash, you're being wasteful, lazy, stupid, and you're taking tremendous risks. But if I can buy a property, and we've got a waterfront house that I may be moving into soon because it's littler, and the man inherited it, and it was a $500,000 house. And he decided in his 70s that he'd keep it as a rental house because it had been his mom's before him. And so when we found out how badly he'd managed it, he'd had 16 tenants in 10 years, and he net $72,000. I apologize. He had grossed $72,000 in the 10 years he owned it. So I leased it. No option, just leased it for the next 10 years for $72,000, eliminating all the work for him. And 6 years later, he called us and we bought it from him.
Okay, there's some.
Sold that property for $600 a month.
So there's some creative thinking for folks who think they're stuck living in a high-cost area. We just got about a minute left on this segment. Michael, you got a question?
Peter, I know we talked earlier about the fact that you still attend classes and believe strongly in education. I guess there's a paraphrasing an old saying that is, when you stop learning, you stop growing. And share with us a little bit about your thoughts on that. I know because you're very big on it, on continuing education.
Just got about 30 seconds, Peter.
I've taken a class every month since 1966, a real estate class. Now,
Wow.
It's cheating now because I probably teach 4 or 5 a year. But nonetheless, every single month since 1966, I've been in a real estate class.
And I'm sure you have some folks that say, Peter, you could teach this class. Why are you taking it? And to them you say,
Well, I'm going to hear things that I didn't hear when I was in this situation. And remember, I'm not taking the class for me alone. I took tax courses when I was earning $8,000 a year. Well, how much shelter did I need for $8,000? But I was able to do 1031 exchanges, installment sales, help people avoid taxes. And by helping them do that, I earned equity for myself.
and besides, learning new things is what keeps life interesting and keeps things moving along. We'll be back with Peter for a wrap-up here in just a moment on Real Estate Radio Power Investing. Stay with us on KDOW AM 1220, the Wall Street Business Network. We'll be right back.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Very honored to have Peter Fortunato with us today, a legendary educator, investor for 5 decades, and he's told us a lot today about how you can do deals creatively and get off the old paradigm of I just have to write a check to buy things. Peter, how in this crazy times that we're in, like you said earlier, you thought in the late 90s interest rates were going to soar up. It's really hard to predict the future. How much longer do you think we can kick this can down the road with $20 trillion debt and so forth? And what should the investor do about it? Just ignore it and just keep taking advantage of the opportunities that come along?
I think you take advantage of the opportunity, and one way to do that, given my view, which is similar to yours in that I see the rates being very low given the amount of currency that gets created. You know, they don't even need paper and ink to back up dollars anymore. They just widen the Excel spreadsheet and say magically, gee, more money.
hit return, and it's a different world.
I'm leveraging like crazy without ever going to a bank. But seller financing is there for everybody if you just care enough to talk to people.
All right. Thank you, Peter. Michael, can you tell folks how they can hear more of Peter Fortunato coming up this month?
Yeah, thanks, Tom. We're really fortunate to have Peter and John Schaub come and visit with us at the Thursday, October 19th evening meeting for the Bay Area Wealth Builders. That would be a great time to get a little bit of insight from them, and that can be found on our website, which is www.bawb.info. Again, that's www.bawb.info, or they can call our information line, which is 707-996-6411. And then we have a wonderful 2-day event coming up that's going to be at the South San Francisco Conference Center. Both, again, the legendary Peter Fortunato and John Schaub teaching together here in the Bay Area, here on the West Coast. That's a rarity, a great opportunity to spend 2 days with them and really get to learn from their insights and wisdom. The class podcast is called Bust, Booms, and Beyond. Again, that information is on the website, www.bawb.info, or they can call that number. And I'll just say this. There's an old quote by Benjamin Franklin, and I think it's very appropriate in light of Peter's continuing education, and both of us strongly believe in that, and that is an investment in education always pays the best interest. And I'm sure Peter would agree with that as well.
Yeah. and Peter, how... Go ahead, Peter. I'm sorry.
Jay Turner always said you can either take a class to learn or learn by the trial and terror method like we did. And I see people doing that all the time.
Okay. How wonderful it is to have you on today, Peter. Thank you very much. And also want to remind our listeners to go to TomWilsonProperties.com and sign up for a weekly newsletter that not only lets you have a weekly update on the economics and things going on in the world of real estate, but also is a website that gives you a lot of education, which Peter certainly believes in very much. Can you believe that? He's gone to a class every month since the late 60s. Also, you can say by signing up, you get access to our commercial syndication deals from Wilson Investment Properties. So it's been nice having Peter on today and Michael with co-hosting with me. Thanks for being with us. And remember, the only thing that matters is what you do next. This is Tom K. Wilson.